traders, welcome to Charts and Coffee. I'd say happy Friday, but it's OpX. And for me, there's nothing happy about options expiration day. It's a lot of volatility. It's action that's sort of singular to the notion that we have options, lots of them, that are going to expire. And then ultimately what we want to then do is back up and then say, all right, if today is sort of a day unto itself, it's sort of like an island. Whatever happened yesterday and whatever's going to happen Monday is separate from the general notion that particular strikes with a lot of open interest are going to then be looked at from the viewpoint of, can we move? I say we, right? If you're someone who wrote options, you're a premium writer, just a general gravitation of price movement today is going to be about mostly, right? It's not the only factor, but mostly about whether or not those options can expire worthless or as close to that as possible. And that's just that whole lingo of Max Payne. How much can the market move within reason, within its typical price movement range? And for example, if there is liquidity at 80, right? Meaning there's a bunch of calls that have been written at 80. And if price can close below 80, that's exactly what's going to be attempted, because it would render those calls that expired today worthless. And those are things that I think about singularly on a day like today. So it doesn't matter what happened yesterday. It's not going to impact what's going to happen on Monday, but it's just a matter of keeping an eye on that open interest. Now, the cool thing is going into OpX, for the most part, we've been, because I have a lot of August 16 swing trades that were open. We closed out of utilities. We closed out of Coke. We closed out of the long position in Newmont Mining and Staples. And those were the majority of the longer term swings that we had, knowing that really by about noon Eastern today, preferably even around 11, I would have those trades closed. So we've actually closed them already. So I'm flat as a pancake coming into today. So yesterday we had a really nice day trade in the Russell. We bought the, what did we buy? The 210 calls. And I probably had the best trade in the Russell I've had in some time. We bought the August 15 210 calls, and then we just took advantage of that move. And then again, that gets closed by about 10 minutes before the cash close. This morning, I'm going to be keeping an eye on gold, and we have a lot of weakness in the indices. So let's see if we can't put on another day trade. But in the afternoon, I'll be looking for some swing entries. So I'd like to get most of this OpX chaos out of the way. And then those particular setups where preferably we have a trend, but at least consistent red or green candles, preferably green, because I still am overall bullish. Can we find some daily price movement range pullbacks? And I wouldn't mind looking at that into the latter half of today, being really prudent about the fact that, again, as we go through the day, the movement towards and even just below those heavy traded calls, or even just above those heavy traded puts, will likely be sort of the tractor beam for price action. And that's where we sit on OpX. And that's really what I want to keep in mind. So if y'all have any questions, feel free to ask. If you have any particular questions about a symbol that you might have open going into OpX, let me know, and I'll kind of break down the open interest view so you can see what it is we're looking at, because it's a really simple concept of, look, if you open up the option chain of any symbol, you'll be able to see at a glance, right, which side has more open interest, the put side or the call side, cumulatively. Then once you've decided one or the other, and usually it's going to be one or the other, sometimes it can be close. It's never going to be absolutely even, but it can be close. And then once you've determined where there's more overall size, then you start to look at the individual strikes, and then you look for where there's liquidity, the most liquidity, and then you rank them. It's not as if, and I think there's this notion of Max Payne, which I really don't subscribe to think that everything is reduced to a singular number, a singular strike. It might be true in some cases, but I find it's really more of maybe two layers of options expiration. So I'm not talking about going to a site that identifies a singular max pain, but I'm saying just do it old school. Open up the option chain, take a look at where the open interest is, and it makes it really very easy to do. It doesn't need any fancy calculation or anything like that. All right, so if we take a look at Newmont Mining, sure. Now we closed out Newmont Mining yesterday. So if you all want to, here's the play along at home part. Pull up Newmont Mining, August 16 expiration. And just to give you a perspective of our position, Newmont Mining was hang on, I'll show you right now. I think I have the recaps here. Newmont Mining was the August 16 45 call. All right. So by the way, at the end of every day, I send out, after the session is complete, I send out a recap showing the traders in the mastery every single entry, right? Every single scale out. So at a glance, you can see the entirety of the trade that we're taking. Now, these are, of course, associated with the alert. So the alert goes out, but at the end of the day, you can see my fills, all of them, right? And then you can see the scale outs, also all of them. You can see where we've closed them out. So these are all associated with, they're all going to be linked back to an alert that we sent. So that gives you an idea, again, of what I had and where we had the trade built from. So again, remember 45 call. All right, so the 45 call, first of all, I have to close it out at some point, right? In terms of the proximity to today. When I look at the 45 call, there's 3,669 open interest at the 45. If you move up a little bit, there's 6,700 at 47 and a half. So, granted, we're way, way, way in the money with this winner. But then I asked myself, if price action can in any way find its way below 49, where there's 2,300 open interest, or below 47 and a half, there's 6,700 open interest, I do imagine it's going to give that an attempt. But what I do know, again, I don't want to say for sure, but what I do know will be part of the factor of where we go is what I anticipate going to 50. Look, if gold just takes off and Newmont Mining has reasons of its own apart from options expiration, sure, but there's 8,200 open interest at the 50 call, right? Just closing below 50 would render those worthless. In fact, right now, well, actually, as of yesterday's close, they were 10 and 14 cents, right? So that's the ambition of OpEx. Where can we close so that the greatest number of options can be basically worthless? So I wasn't expecting much higher highs than this. So when traders say, Rog, yeah, why are we getting out? Because I'm not looking for the market to crush 50 and keep going into today's expiration. In fact, I would think we're going to hit a wall there. And if anything, if we can close below 49, where there's 2,300 open interest, they're going to give it a try. So you can look at, in order, where and I'm just looking at another screen, gang. So the most is at 50. The second most is at 47 and a half. And the third most is at 45, right? So I kind of rank them and look at current price to figure out the proximity of where that max pain could be. Again, not that calculation. So that's how I would do it on NEM, and that's why we got out, because I did not have high anticipation of it breaking 50, or if for long, figure, you know what, let's just take our ball and go home. The chances that we continue to move through 50 are low. The chances that we get below 49 are probably high. It's just probability though, right? That's all. It's just probabilistic thinking. All right, can we look at T for where did it go? Can we look at T for a short-term swing? Yeah, I would focus on right there around that Darvis level at 1886. That's what I would focus on for T. Ryan, that's the support level I would look at. Was yesterday a buy in the TLT? So I'm going to look at the futures contract for the ETF alternative. And, if you take a look at where the green candle met the gray, yes. Yeah, if you take a look at where the green met, but here's where I'm going to at least mention yesterday, Earl, was a much higher than normal volatility day. So normal is where the candles stop in the gold and they stop in the gray. You'll notice we went all the way up to just about the second standard deviation of the daily price movement range. And we went all the way down to the second standard deviation of the daily price movement range. So that was a very wide day. So while it would be easy for me to say, yes, the gray zone was valid, it was, but please know we went far beyond the 68% probability. And that's ultimately where I say, look, it is a buy. It's a green candle. It's a buy or nothing. But the challenge was this was an outsized volatility day. And so as long as price does tend to respect those two red lines and green lines, I mean, those are support and resistance based on volatility, but it is going to be a little more heat. It's going to be a little bit more volatility to handle for a day like that. But yes, and the simple answer is yes, Earl, but nothing's that simple, right? It did have an outsized volatility day. Basically, the second standard deviation is in that 32% rare air of what is pre-calculated as potential support and resistance, but we know it's outside basically the 2/3 of normal price action we would expect to see. And you can see we stayed within that 2/3 leading up into that day, right? The 9th, the 12th, 13th, 14th, all within those normal parameters, and whammo. And some of this is going to be response to yesterday's retail sales and unemployment claims. We know what the market did yesterday in terms of the individual indices and the way that they rallied at 8:30, and bonds sold off for whatever odd reason, but it did. We had higher yields on that, likely because rather than a half-point cut at the September 18 meeting, it looks like we're going to get the quarter. Okay, thank you for the question. All right, next up is, bear with me, we looked at NEM, we looked at T. Question here. Starbucks is getting a CEO. Is the stock price too high, too fast? Let's just take a look. I seldom will factor in news like that, Kristen V. Yeah, there's no setup there for me, my friend. No, I mean, it's very, very strong, and that's great. I don't know what this older line is from. There we go. It's very, very strong, and that's fine, but I don't have structure there nor a setup. What I would say, if you like this narrative, right, there's a story, and behind the story, if there's price action that supports maybe some optimism about this company, I would say shorten the time frame, maybe day trade it, maybe a short-term swing, but I'm going to leave it alone after a large gap like that. To me, that's not clarity. Trading up to that level, having a nice trend, that would be nice. But that jump up, to me, it's just not clarity for me. But shorten the time frame and you might find some clarity. Yeah. Let's see. Next up, Prepkiss asks, will I be doing a new day trading class for 2024? No. So thank you for asking. I do have a class coming up in, I think, the first weekend of October. So usually I have a class in September. Yeah, we're pushing it out to October this year. And it's going to be the most important topic that anyone who wants to be a trader long-term, make this a career, grow an account, whether that be a small account or a large account, is the most important topic there is in trading. It's on an indicator. It's on a strategy. It's actually, how do you position yourself in the market? How do you determine position size? How do you determine stop loss? And how do you set yourself up to grow an account? And I get this question a lot, and it's going to be about account growth. Yes, we will have some individual tips, tactics, and tips and tactics on small account, but it's generally about account growth. If there is anything that is the quote unquote secret, or as we like to call it, the holy grail to trading, it is that notion of knowing how much to trade and knowing how to manage trades. And this is coming from someone who's been testing different things for the better part of 30 plus years and who's never blown up an account. And it's just, I know people hate this word, but it's really interesting. It's the math, right? I know people hate the word math, and yet we look at a guy like Jim Simons, who was a math genius, right? He crunched the numbers. If you've read that book, you understand the guy crunched the numbers. He knew the data, and he had a repeatable process. And that's the same thing we can do as retail traders. But we think about it from the size of risk and reward, from the side of position sizing, things like that. So that's what's coming up in October. But will it apply to day trading? It's going to apply to everything. It applies to the way that I position trade, day trade, swing trade, etc. So that's what's coming up, and I am super stoked about it. And as I parse through it, I realize that most traders are not going to be super thrilled if there's not a secret squiggle attached. And that disappoints me, because in my mind, I'm thinking any strategy you have and any indicator you own, the best optimization, right? The best way to make it more powerful than you even initially thought it was when you bought it is to figure out how to position size and optimize it. So that's really what it's about. In my mind, we're still working on, I think the dates are pretty much set. I think it's October 5. I'll let y'all know for sure. I mean, it's only August, but I believe it's October 5. So we'll be talking about that more, but that's what we're going to be talking about. Folks say all the time, Rog, how do you position size? How do you stop loss? There's a formula. There's a formula to that. So we'll be talking about that. Thanks, practice. Next up is, if we want to trade with you, which room do we join? All my trades are in one room only, and that's the Sector Secrets Mastery. Yeah, Christine. So you can find that at sectorsecrets.com. Yes, all my trades, the day trades, the swing trades, the position portfolio. Yep, that's all in one place. That's the all Raghee room. Yes, you bet. All right. Next up is, gang. What happened to RBOB? Andy, I don't know what happened to RBOB. I've been looking at crude oil. I really haven't been looking at unleaded all that much. I don't know what the reference is to. I mean, it's heavy, right? Crude's been pretty heavy too, right? So wherever crude goes, typically you're going to see in some way unleaded gas respond. And we've seen crude tumble back down through 80. So I would say largely watch crude and then keep an eye on the rhythms of demand. The seasonals apply to crude and RBOB. I don't think seasonals apply to everything in any way. But they do tend to apply to RBOB, to crude oil, to natty gas, to heating oil, things like that. All right. Next up, NVO on the daily. Sure. All right. NVO EVA is on the daily. Let's open that up. It's printing just now its very first green candle. And it's shaking, it's trying to shake off the bearishness. This is still a very heavy trend. It's an interesting kind of push-pull, where on one hand, we're above some key levels like the anchored VWAP and the propulsion. But on the other hand, take a look. It's kind of a nutty chart. We're now printing some bullish, neutral to bullish participation. My recommendation is leave it alone until we get a little bit more clarity. I mean, there's a lot of different forces going on right now. So I would say leave it alone until we get a little bit more clarity. But it is trying to shake off that downtrend now that it's above the white dots. It's above that blue line. It has green candles. It's a tricky one because the trend was weak when it tumbled down from about 148 to just under 120. It's taken a little longer for the trend to say, yeah, we're not completely convinced that this thing is out of bearishness yet. All right, last question for the day. What is my view on GLD? Well, that will always come from GC, and I want to be a buyer. Pavel, really simple. I want to be a buyer. And we've been tethered to this narrative of wanting to be long, because I mentioned one of my swing trades that we closed was a nice win in Newmont Mining. And Newmont Mining is the number one weighted stock in the gold miners, and gold miners moves like gold. So you have a lot of, there's a lot of things that open up when gold starts moving. So gold to gold miners to stocks weighted within it. So I like the long side. We've been taking advantage of the long side. And if GC can pull back, we'll look for GLD calls again. Yeah, I like the long side. All right, gang, that's a wrap. As always, thank you so much for being here. For Charts and Coffee, be good to each other. OpEx is upon us. I'll talk with you on Sunday for our top tier outlook at 6 p.m. Eastern. All right. Until then.